Stop everything you're doing right now and listen closely, because what I'm about to tell you isn't just another piece of financial news. It's a seismic shift in the global financial landscape, a signal so loud and clear that ignoring it could be the single biggest investment mistake you make this decade. I want you to imagine for a moment the vast, oil-rich sovereign wealth of Abu Dhabi, the kind of capital that moves markets and builds futuristic cities from sand. And now, I want you to picture the most powerful investment committee deliberately and with immense conviction, steering a colossal portion of that wealth directly into a Bitcoin ETF. This isn't a speculative crypto fund. This is the establishment, the old guard of money, placing $1 billion bet on Bitcoin's future. And if they see the writing on the wall, you need to see it too. So, as we dive into the stunning details of this game-changing move, I need you to hit that subscribe button and ring the notification bell, because the insights we're unpacking today will fundamentally change how you view the future of money, and you won't want to miss a single second of this breakdown. Let's talk about the Abu Dhabi Investment Committee, or ADIC. This isn't some fringe hedge fund or a reckless venture capital firm chasing the next big thing. This is a sovereign entity, a committee that manages wealth for a nation whose very identity has been intertwined with fossil fuels, with the old energy paradigm. For an institution like this to make a move of this magnitude is not just noteworthy. It's a deafening statement that echoes across every trading floor, every central bank, and every portfolio on the planet. The specific action they took is so bold, it's almost difficult to comprehend. In the third quarter, ADIC didn't just dip its toes in water. It plunged headfirst into the deep end, tripling its existing holdings in BlackRock's iShares Bitcoin Trust, the IBIT ETF. Let that sink in for a moment. They didn't just buy a little more. They tripled their position. They raised their shares to nearly 8 million. At the end of the quarter, that stack of shares was valued at approximately $518 million. That's $500 million with a B, allocated to a Bitcoin-backed asset. But the number itself, as staggering as it is, isn't even the most important part of the story. It's the context and the intent behind it. The Abu Dhabi Investment Committee didn't do this because of speculative frenzy or a fear of missing out on a short-term pump. Their official statement is a masterclass in strategic, long-term thinking. They explicitly stated their intention to establish a, and I quote, small but long-term allocation. Now, you have to understand the language of these institutions. When a sovereign wealth fund says small, they're referring to a percentage of their overall, almost unimaginably large portfolio. But that small allocation is $500 million, which tells you just how massive their total war chest really is. More importantly, they are viewing Bitcoin as a store of value similar to gold. This is a critical narrative shift that we've been waiting for. This is a moment where Bitcoin transitions from a speculative internet asset, a plaything for retail traders, into a legitimate, institutional-grade digital gold. They aren't buying it to use as a currency to buy coffee. They are buying it to hold, to preserve their wealth for generations, to sit alongside the gold bars and real estate in their permanent portfolio. This is the ultimate validation of the digital scarcity thesis. Think about the profound symbolism here. A nation whose wealth was built on oil, a tangible, physical resource extracted from the earth, is now allocating a significant portion of its future security to a purely digital, decentralized mathematical asset. It's a hedge against the entire old system. It's a recognition that the future value isn't necessarily going to be tied to barrels of crude or piles of precious metal, but to verifiable, immutable code on a global neutral ledger. This move by ADIC is a powerful counterargument to every skeptic who ever said that Bitcoin has no intrinsic value or that it's a bubble waiting to pop. You don't park $500 million in a bubble. You don't triple your position in an asset you believe is doomed. This is a calculated, cold, and rational decision made by some of the most sophisticated financial minds on the planet, with access to research and intelligence that you and I can only dream of. They're looking at the same macroeconomic picture we all are: global debt levels, currency devaluation, geopolitical instability. And they are making their move. They are choosing Bitcoin. And if an institution with the foresight and resources of the Abu Dhabi Investment Committee is making this choice, it demands our attention. It forces us to ask the hard question: what do they see that the average investor is still missing? The answer to that question could very well determine your financial future for the next 50 years. So, where does this leave us? The everyday investors watching from the sidelines as the titans of global finance make their billion-dollar moves? The Abu Dhabi Investment Committee's monumental allocation isn't just a data point to be filed away. It's a live-action blueprint, a masterclass in portfolio strategy that we can no longer afford to ignore. This decision to embed Bitcoin deeply into their long-term holdings signals a profound understanding of a new economic reality, one where the traditional rules of diversification are being rewritten before our eyes. For decades, the classic 60-40 portfolio of stocks and bonds was the gold standard, the safe harbor for preserving and growing wealth. But that model is cracking under the pressure of unprecedented monetary experimentation and global debt. What ADIC has recognized is that in this new era, true diversification isn't just about spreading your bets across different companies or government bonds. It's about finding assets that are fundamentally uncorrelated to the entire traditional financial system, assets that operate on a different set of rules entirely. Bitcoin, with its decentralized nature, its fixed and predictable supply schedule, and its existence outside the direct control of any central bank or government, represents perhaps the only pure form of this uncorrelated diversification available in the world today. It is a hedge against the very system that ADIC, as a sovereign entity, is deeply embedded in. They are, in effect, buying insurance against a potential failure or devaluation of the very fiat currencies and government debt instruments that have underpinned global finance for the last century. This isn't a trade, it's a strategic repositioning for a new monetary age. And let's be crystal clear about the signal this sends to the rest of the institutional world. When a sovereign wealth fund of this stature makes such a public and decisive move, it creates a permission slip for every other major player. The pension funds, the university endowments, the massive insurance companies, and the other sovereign wealth funds that have been watching from the fence, conducting their own quiet due diligence, now have a precedent. They have a case study. They can point to ADIC and say, see, it's legitimate, it's prudent, it's necessary. This is how a trickle becomes a flood. We are witnessing the very beginning of a capital rotation of historic proportions, where capital begins to steadily, irrevocably flow from the analog stores of value of the 20th century into the digital store of value of the 21st. The narrative of Bitcoin as digital gold is no longer a theoretical talking point pushed by crypto enthusiasts. It is now a validated investment thesis being executed by some of the most powerful capital allocators on Earth. They aren't swayed by the day-to-day price volatility or the noise on social media. They're looking at the long-term arc, the fundamental properties of the asset, and its unique role in a world drowning in debt and currency creation. For you, the individual investor, this creates both an immense opportunity and a pressing urgency. The opportunity lies in the fact that you can make the same strategic allocation that ADIC is making on your own scale. You don't need $500 million. You just need the conviction to understand that the world is changing and the courage to position your portfolio accordingly. The urgency, however, stems from Bitcoin's unforgivingly finite supply. There will only ever be 21 million Bitcoin. As more and more entities like the Abu Dhabi Investment Committee decide they want a piece of that fixed pie, the competition for those coins, whether held directly or through ETFs, will intensify. The early movers, the ones who understood this thesis before it became conventional wisdom, will be rewarded. The beauty of this moment is that the on-ramp has never been easier. With the approval of spot Bitcoin ETFs, the barrier to entry has been demolished. You can now gain exposure to Bitcoin to the same traditional brokerage accounts you already use, making it as simple as buying a share of Apple or Microsoft. This accessibility, combined with the overwhelming validation from institutional giants, means that the window for getting in at what future generations may look back on as the early stages is still open, but it is closing faster than many realize. The Abu Dhabi Investment Committee has laid down its cards for the whole world to see. The question now is, what are you going to do about it? The information is right here in front of you. The precedent has been set. The strategic rationale has been explained. The only thing left is for you to make a decision. So, I want you to take that next step. I want this to be more than just a video you watch and forget. Go down into the comment section right now and tell me your thoughts. What is the single biggest question holding you back from making a strategic allocation to Bitcoin in your own portfolio? Is it the volatility, the security, or simply not knowing where to start? Let's get a conversation going. And if you found this deep dive valuable, if you feel like you now understand the monumental shift happening in global finance, then do me a huge favor. Smash that like button, share this video with one friend who needs to see this, and subscribe for more unflinching analysis of the trends that are shaping our financial future. The old world of money is changing. Let's navigate it together.